Well, Warriors, how's everyone doing? Alexander, Ali Bacha. Hi, Hugo, how are you? Brock, my trading warrior brother, and Jays, how are you? And
Morning,
Ryan, how's it going, buddy?
Yeah, well, good, mate. You?
Pretty good.
Good.
Thank you, Jay. Huh?
Wonky Wednesday. Welcome to Wonky Wednesday.
Yeah, and I have some questions to ask you.
Uh-oh.
So Jay's talking
It wasn't
about
me.
this. Yeah. All right. Yeah. I don't know nothing about nothing. That's
It
what
was
a friend of
Ellis.
mine told me his father taught him to say in Little Italy in Chicago. I don't know nothing about nothing. So this was a turnaround Tuesday trade. It worked pretty good. Had a little drawdown of $3, but it was, depending upon what you took out of it. And nice bounce back in gold. But really the feature is, and I know, Ryan, you didn't do it, but it kind of reminds me what happened in Euro last night of the flash crash that we had in gold a long time ago. Let me go back to the daily. This, kind of a flash crash. And, you didn't know if that was going to be the bottom until it did some work and put in a higher low, but kind of has that little bit of that feeling to it that, may have been some type of flash crash. Anyway, that's...
Yeah, well, it's funny. I've just been speaking about that in the room because it's important when you get things like this to watch the price action afterwards. That's the important part. I mean, you look at that gold chart where you saw the flash crash there. And what do you see? We had that level there. What was it, 1720? I think it was somewhere around there.
Yeah.
And we, flushed it out. And then where does the first support come in straight after that candle? Bang on 1720. And the same happened with the euro last night. A lot of eyes in our chat room were looking at there's a 61.8 fib at 1290. So we're looking at the 1300, 1290 area as the next level. Bang, over Asia, we get it flushed. Where's the support first thing? Where's you walk in this morning? 1290, 1300.
Yeah.
So it's one of those things, important lesson to learn about price action. Yeah, watch your levels, and if these levels get broken, watch how they react after, because bang, it's right back as a level again.
And with that happening, of course, finally got a new low in EG. I mean, coming into this week, I was looking to maybe buy a pullback here, but I kept watching it melt through all these different fib numbers, and I figured, like Blake says, the deeper the correction, the less chance of a continuation of the prior move, and it just kept melting through. 50% it melted through, and then 61.8, and then 78.6. So
up the stairs and out the window, wasn't it?
Yeah, they have the stops now. Now I don't know who's long EG now.
I am.
Yeah. Okay.
Pretty much the same thing. I mean,
not yet, guys. Just a little bit more.
Another 200 pips, right? So, you think there's another 200 in there still?
I think low 83s is where I want to be.
Okay. All right. So this is where Stell is.
Yeah, I'm not going to disagree with that over the long term, but on just today's price action, driven by the CPI report, we had the barriers down there, which, if you remember, I took a long against a couple of weeks ago. That got me the run up to the 85s, but again, that flushed out to 90s, and again, bang, straight back up above 84, and 84 support again. And I took a long at 04 this morning. Chop some up to 28 so far, and see what happens.
Yeah. Okay.
It's all about price action.
Okay. K-Man, are you around?
I don't see him.
Okay.
Not yet.
All right. So I saw a big article about what some pension fund managers did in debt markets and with the yen that could spell the beginning of the end of this bearish move or bullish move, whichever way you pair them, US dollar yen.
Well,
what do you think?
Good morning, guys.
Morning.
Good afternoon or whatever. I bet I know where K-Man's at. Isn't there like a big like world? Isn't there a soccer like World Cup soccer or something going on?
Yeah, it was last night.
I bet he's up late watching that because isn't Belgium playing somewhere somehow?
They were playing Wales.
Oh, and they lost, right?
Jane's team.
Did they lose?
No,
They got beat, right?
I don't know.
Draw, Jane said.
We draw.
Huh? Oh, here's King,
there he
man.
is.
I thought you were, maybe hung over or something
No.
after last night's match. I don't know.
I don't drink.
You guys were in the chat room yesterday in Asia, early Asia, before Asia came in. Really, it's right at the end of the North American session, talking about all this World Cup soccer stuff, and I kind of caught like bits and pieces of it as I was putting together analysis, and I figured that's where you were at today.
No. I don't drink weekdays.
Oh, okay, good. That's good to know.
My week
I missed that.
usually lasts from Monday to Tuesday.
K-Man, I'm glad that you're here. Actually, Dale was just asking you something, and by the way, I decided to play counter trend a little bit today in the yen, and I'll talk about that in a moment. But Dale, go ahead and ask your question.
Yeah.
Well, I got a friend of mine sent me some information. I don't know, it was on the presses about some big action in pension funds in the debt markets in Japan, which could basically spell the beginning of the end of this rally in US dollar yen. Maybe you could explain it to me, what happened?
I have not seen anything. That's I haven't seen anything. The word on the street was that there's exporter offers lining up 115 and above, and there's a pretty sizable barrier at 115. So I reckon most of it has to do with that. I haven't seen any specific moves in the Japanese debt market. I'm gonna have to look it up and come back to you on that one.
Okay.
If I find it.
Can you forward it on, Dale?
Yeah,
Just
can
in
you?
the chat room?
I'm going to try to. I'm going to ask the guy to send it to me again because I can't find it.
Cool.
But I will. I'll drop it.
Okay.
Did your dog eat your homework too?
The wind blew it away. I was
So
holding on tight, and there was a gust.
you guys, really quick. You guys were talking about the euro sterling, and I want to show you. I'll just show you since it is the topic of conversation right now with the euro, and we're going to talk a little bit about the dollar today. I want to talk about let's get over to the euro sterling really quick. Ryan just said I'm long, and I own a little bit of euro sterling too. But I want to show you this chart. Here's the daily chart, and this is channel support actually that we're hitting today. And right, this is a pretty loose channel, but if you take the previous highs from most of 2021, that's the channel resistance, channel lows somewhere around here, and I'm just connecting like the bodies over here to the spike low here. That matches the spike low today, but more importantly than just this channel support, I think, is what you would see here on like an intraday chart, possible false breakdown below the lows. So I guess
the daily had nice divergence, Blake, on your chart.
Yeah. Okay. Yeah. No, that's a good point too.
Pretty glaring.
If we do find support here, that's going to end up being really divergent relative strength. But on top of it, and that takes us over to the euro dollar. I had a bid in the euro overnight at I had it at 112.85. I got tripped for a long down here in channel support. Well, actually, I was adding to some longs, and then because I had a very, very small position, I basically doubled up my position down here because I knew there was a lot of support here. But Ryan pointed out, we also hit the 261% fib extension of this October range, which, by the way, when you start reaching for a 261% extension, it doesn't happen often, but when it does happen, you have to respect it. Like, it's one thing when you get 161% extension. Those are almost, for me, I tend to at least trade them, or if I'm long, I'll take profits, or if I'm short, I'll take profits at 161% extension, almost without questions asked. When you reach a 261% extension, that's a pretty much a, for me, it's like, okay, we are going to probably bounce really close to that, or, we're going to reverse pretty close to that.
DSI was 9 last night, Blake.
Yes, the daily sentiment index was very extreme. If you go to our news and research room, we have the DSI uploaded here from last night. Euro was extreme. Volatility is still extreme. What's going to be really interesting, I think, is if you start to see stocks roll over and the dollar, doesn't strengthen. What's the likelihood of that happening, do you guys think? And I'll give you my ideas here. If you start to see a little bit of risk aversion, or you start to see some stock market selling, how do you guys think the dollar is going to move? And I'm going to ask, go round here and ask you guys what your thoughts are. What do you think, Stelios?
Well, I think it depends on what kind of stock move we're talking about. If it's something orderly, then the effect on the dollar could be anything. If it's something a bit more urgent, then I think the short-term reaction will be for the dollar to strengthen. It always is.
Okay, yeah, okay, I can agree with that. Ryan, what are your thoughts?
Similar to Stel's, I'll also add that I think that what the dollar does is down to what yields are doing at the moment. We're still ticking up in 10 years. That's keeping dollar bid. The risk to stocks is if, I think part of this euro move is down to the virus and the increasing lockdowns in Europe. That's going to hit, European stocks. And if that washes across to the States, then we're going to see a potential risk off move on that, because market's going to be thinking, well, here we go again with lockdowns and, stalling economies. So it could be a case that we see dollar strength on that, that old safe haven flow, and stocks dipping.
Okay, K-Man, do you have? Thank you, Ryan. K-Man, do you have any ideas regarding this?
Well, if it's risk off, usually what we see is a strong dollar versus the higher yielders, and the lower yielders are strengthening a bit. So that is euro crosses a bit higher and yen a bit higher versus other currencies. That's the usual risk off play, right? What
yeah,
you're talking about.
That's exactly right. And that's something I want to make sure I highlight with everybody. And this is the common misconception is, and I think everybody here just nailed it. And I want to reinforce this with you guys. And I guess the good way to explain it is maybe take the dollar index, and let me pull up a dollar index different chart really quick. Let's clean that up, and let's go to a weekly chart of the dollar index. Okay. And then let's overlay that with the S&P. Okay. And what you're going to notice, and I'm going to kind of let this exaggerate a little bit. The dollar can actually go lower with stocks, and as everybody here was pointing out, is you can see the dollar really, lose strength as stocks go down. But where it gains strength is usually against, like as K-Man so aptly put, is against some of the high yielders. So you would see the dollar perform better against, let's say, the peso, the rand, Norway, Aussie, Kiwi, maybe Canadian, and you would see it, and maybe even the sterling to a certain extent. And then you'd see it, maybe just be steady, maybe even go down a little bit against the euro, and against the yen, and maybe, some other, smaller European country, or smaller European countries as well. But the dollar doesn't necessarily have to gain strength universally on a risk off move. But as Stelios pointed out, if the move becomes exaggerated enough, like let's say it's a COVID type of meltdown like you saw here, yeah, the dollar will across the board catch a bid. But so it usually, you know, it's determined more on the strength of the move and how aggressive the move is about the dollar. So
you're in alignment with, I know you didn't ask my opinion, but Peter Goodburn was talking about that during his interview, which is going to catch a lot of people the wrong way, looking for a bid to come to the dollar. He's looking for both, you know, a pretty deep correction and the dollar selling off, maybe the dollar even being the reason for the sell-off.
Yeah, and you know, Dale, it's one of those things that you've obviously been here with us for the last 5 years, and you know it's something that we talk about from time to time when we talk about risk aversion. Yeah. I think it's a common misconception with most retail traders that if the stock market sells off, the dollar catches a bid. And it's not that it won't catch a bid. It's just you have to be selective on how you trade it and where it's going to catch a bid on. But that's why if one of the better, you know, I think one of the better things to look at is, you know, you look at a cross rate like the Euro Aussie. I mean, the Euro is, let me pull up a different chart. I don't want that one. I want, I'm going to pull it on.
You know, we've kind of been the haven here for decades, you know, and you know, dollar denominated assets, period. The bond market, the stock market, we've been, you know, the leader. So if there's a problem and a confidence crisis about the US, and if you look around, there's, you know, plenty of reason. We're pretty dysfunctional government.
Yeah,
there might be a flight away from anything that has a dollar attached to it.
You know, I've had that conversation with a lot of people, and you know, and I don't, and I just think that the depth of the dollar and our treasury market, and I mean, we are still, as much as it sucks,
we the cleanest dirty shirt.
We are the cleanest or the least dirty shirt in the laundry right now, and that doesn't mean
I
it's always going to be
some food on mine last night.
Yeah, I'm sure you got a little bit of, you know, some of your soup and your non-chewable food.
I didn't have my bib on, you know.
Yeah, exactly. But you know, the fact of the matter is the dollar is still, you know, the reserve currency, whether you like it or not, and that doesn't mean it's always going to stay that way. So,
if I may, there's a good reason for that, because with the how many 23 or so $1 trillion equivalent injections, a lot of people have put on even more dollar debt than they already had during this pandemic. And we could see it already on things like the Rand and the MEX, and well, maybe even Turkey in a way. What happens when dollar yields are pulling up a little bit is that those people, they will be probably needing to buy dollars to repay back the excess of debt that they have put on, because the rates were so low. So I think in a way that is going to bring us back to a more how shall I say, typical risk on risk off play down the line. So now everything is fine because the stock markets are holding up, and they're still and the Fed is still injecting $105 billion a month, and next month 90. I would like to know when will be the inflection point. When is it going to become that, we don't, there is not enough injections anymore to cover for everything that they have been catering for since the pandemic started. And in that sense, I think we are going to go back to a more normal or more usual pre-pandemic style risk off and risk on when it will happen. And the dollar will, in my opinion, be in demand again when risk is coming off. That's just what I wanted to say.
All right. Well, thank you for your views, K-Man. I do appreciate it. And when you talk about more traditional risk on, risk off, you know, Jai just asked a question about gold. and he asked, will gold, catch a safe haven bid? And, and in years past, gold, one of the things that I always looked at, and one of the benchmarks I always knew if risk off was real. I'm like, look, if the dollar and gold are both catching a bid, you don't want to be long stocks. That's just it's a good rule of thumb to live by. It's not like a 90, it's not a 99% of the time that's correct. It's a more, it was more of a 65, 70% of the time. If gold and the dollar are both bid that day, the last place you want to be as a day trader, or even a swing trader, the last place you wanted to be was long stocks. That was a good rule of thumb I always lived by. And that's a hard question to answer. And I could say, well, because of the rise of cryptos, and then your response would be, well, Blake, cryptos have been around longer than just, a year or two. They've been around for years, but it's more of the popularity of cryptos over the last, I say popularity, the institutional popularity over the last couple of years in crypto that really, puts a question mark on that, it really poses a big question about precious metals in a risk on, risk off environment. Because I honestly don't know, because I don't think we have enough data and experience with the gold bugs becoming more crypto craze folks in recent years, and institutions taking more of a stance in cryptos. I don't think we have a good enough data set to understand, because when's the last time we saw risk off minus that 3 weeks post COVID lockdown? We don't know. So I don't have enough information to really draw a conclusion to give you a decent answer on that. Any thoughts here? Now, Stelios, minus you, because you're going to just say buy gold and forget about it. So anybody else with an answer? Just kidding. Stelios, I'm totally joking with you. But any opinions here? That's it, right? Wow. That's awesome. Way to go.
I'm the wrong person.
I was waiting for the sale.
So I won't answer.
So what do you think? Well, let's start with Stelios. What do you think? I mean, I kind of know what you think, but let's go ahead. Give me what you think.
It's we're talking about now combinations of asset classes moving, right? So I mean, as long as I think we can all agree, as long as yields are low and the dollar is not strengthening too much, I think the direction for metals is higher. What I think the main driver, and yes, I have a different time frame than pretty much everybody else. The main driver for me for metals is the changing money supply. That's it. And as long as banks,
are we losing Stelios? Or is that just me?
Tightening in quotes, they're not tightening, they're reducing the rate at which they're easing. Unless they start properly tightening. Oh, it says here my connection is unstable. Can you hear me?
Yeah, you're coming in a little.
Sorry. Okay. Unless they start actually shrinking the balance sheet, I don't see anything that's going to keep metals from going a lot higher in the medium term. Now, in the short term, if we get the dollar rallying more, yeah, of course, I think they're gonna pull back. And speaking of metals, actually, and the dollar, for the DXY did hit 96.10 overnight. I am switching today out of my some of my dollar holdings into euro holdings. So a couple of my silver positions, which are in dollar denominated ETFs, I'm switching into euro denominated ETFs. So even though I don't have a straight FX position in euro dollar, I am getting out of dollars and into euros. Just I wrote this on the chat room about an hour ago, and
you just had to throw that in there as a European.
Of course. I like that. I like that a lot.
I think that's smart, man.
All right.
Well, you know me. I'm trying my best.
All right. So anyway, I wanted to point out, this is and Ryan and K-Man, I'd love to get your opinions really quick here, but I just want to show you, this is Bitcoin in teal and then gold, right? And you'll notice the divergences between the two. Here's Bitcoin at highs, gold lows, gold highs, Bitcoin lows, just even most recently, Bitcoin hit highs, gold hit lows. So it's going to be interesting to see if, again, I'm going to reiterate, if stocks do go down, and which that's a question mark too. I mean, we haven't seen stocks go down for 12 years, minus 3 weeks post-COVID lockdown. But other than that, I don't know about you guys. I mean, we may have had a month or two where stocks taper tantrum or whatever, but really, in the grand scheme of things, stocks have moved higher literally for 12, 13 years straight. So, and like I said, you can argue with me about that point, say, well, we did have a sideways market for 4 months here. Yeah, whatever. I mean,
since 1982, bro.
Well, really just think about post, GFC. We've gone pretty much, straight up since then. But what are your thoughts here regarding gold and Bitcoin? Going back into that, what do you think, Ryan? You have any thoughts here?
Not really. I'm not a big Bitcoin fan. Correlation between gold and Bitcoin. At the end of the day, all I'm going to do is trade the levels. I don't care whether Bitcoin goes to 10 million or goes to minus 10 million. If I'm trading gold against the levels that I've got on my chart. I'm not a fan of the cryptos. I'm a fan of the technology and everything behind it, not of the stupidness that's going on in coins at the moment, and people like Musk jumping in and out and putting up stupid tweets, and 1 minute you're up 10 billion, the next you're down 10 billion. That's not a market I want to trade.
No one posed that they're down 10 billion. People only make money on FinTwit.
Exactly.
Yeah.
Exactly. But it's like anything. I'll take the cheap route out. Talking about when you're looking at multiple assets to define what one asset's going to do, just trade the damn levels. Pick your market, trade the levels.
I'm with you, but looking at, if you're trading gold and you have a thesis, right? You're like, look, stocks go down, I'm buying gold. I'm just going to buy gold. Is that thesis? Do you shoot holes in it now with Bitcoin, the rise and emergence of Bitcoin on an institutional level? And that's really the question. And that's, going back to what Jay was asking. And I personally, I would question that thesis now. Like if in what we've seen with gold in recent months and really over the last year, since post-COVID lockdown, what we've seen with gold is gold actually moves a lot more in tandem with assets, like the stock market. I should say risk assets versus more of an inflation hedge. K-Man, do you have any thoughts here before we wrap things up?
I think there's a good part of as you say, the gold market who is now interested in Bitcoin, but I think there's some of the players like banks or hedge funds or whatever, they have found this play where you can, if Bitcoin comes off, we have seen that people want to switch out a little bit of Bitcoin and then buy gold again, because people are now trading this kind of across, and then they are just playing around with it. That's what I think. But in the meantime, if risk comes off, I think there's if stocks come off, there's a good chance that Bitcoin comes off, but it will depend, in my opinion, on where inflation is then and where the Fed injections are then, or the ECB injections are then, to know whether gold is going to come off or going up more. And that's for the time being, I'm long, and I'm happy to be long. And okay. in gold, as we were talking about it in the chat room, yes, gold and dollar can go up together. That was a question that was asked here, and I said yes, they can go up together, and we are seeing it. They can go up together, and as long as inflation is that high, yes, they will be able to go up together. But there might be an inflection point where debt in dollars, not detained by U.S. accounts but by foreigners, there might be that inflection point where all of a sudden dollar picks up a bit because they need it. They need dollars to repay debt, and if the yields go higher, then maybe gold turns around and falls off a cliff together with the stocks.
You know what we need? We need a Bitcoin gold cross to trade. Give me one of those. I'll let you trade that.
I saw Peter Bookbar.
That would be actually a good cross, and I'm sure there is that cross. Hey, I'm sorry, Dale. I just want to say one last thing. If you guys follow the chart of the day, which is a free, you just go to our blog. You probably see us on Twitter. I post a chart of the day. Yesterday was the U.S. dollar Japanese yen, which is the bull flag pattern. I actually, I'm going to follow up with that because I actually did short the dollar yen this morning. The reason why is because we are failing up here, and I'm more worried about the dollar index at resistance. You know, currently. So that's why I'm actually shorting dollar yen here. Just, and my risk is really above 115 because I think above 115 and we are going to see 118. So I mean,
so you got people to buy the yen so you could have better shorting opportunities.
Yeah,
you're
that's
manipulating the markets, man.
The whole, you know, few hundred traders that read that blog post last night. Exactly.
Yeah.
No, but but the thing is you know, your ideas have to shift, and and that's the way I'm looking at it right now. It's like we do have a shift of the dollar really hit key resistance and it stopped. So you know, that's what I'm thinking right now. So
by the way, guys, I posted that information on the yen and the debt markets in the chat, in our Skype chat.
Cool. All right, thank you. We'll put that in the chat.
And no interview if you're rushing, Blake. I got a last minute cancellation, but
you you didn't. Okay, I'm in the middle of actually typing some stuff out for our Forex Analytics clients right now. Yeah. You guys can grab. I'll continue the conversation, please. I'm here. I just need to type a few things. I'm sorry. I've got to.
Or we could wrap it.
I'm putting in a new pattern in play for traders. So
all right, so subscribers, you're going to be getting a notice on. I hope you have your app on your phone, and you'll get the pips. I think that's great. You could be away, and you know, Blake sees something, and you're having breakfast somewhere, and
it's going out right now.
There you go.
And yep, it's out. And you guys won't see the notice because the update. The desktop notifications come on a different screen on mine. So if you guys are Forex Analytics subscribers, you just got a new pattern in play. By the way, we have the Canadian moving right now. So there was a Canadian CPI that just came out. So Stelios, I cannot believe he didn't get my attention.
I wouldn't interrupt your pattern in play, man.
No, but please. I mean, you know, obviously Canadian CPI must have come in a little bit light.
It came in exactly as expected.
I see a little bit trimmed. The trimmed, which is core, basically came in 0.1% worse than expected. Same with just a CPI reading as well. So that's what I'm seeing on. Let's just see here over here on the calendar. But I don't know if I'd play into that. Not with the dollar, the way it looks right now. So the CPI came in this previous actual CPI and the forecast actually for this this core or common CPI or trim CPI was actually. But that came in at 3.8 actual. Sorry, I was looking at something else. Did that come in at 3.3? How come my reading's a little different here? Huh. Okay, let me check one more place really quick.
You want the numbers?
Yeah, what do you get? What'd you get, Ryan?
Yeah, so CPI year on year 4.7% up from 4.4. The BOC core was 3.8 up from 3.7.
3.8.
They've got all the 15 other metrics that they use. The CPI common was 1.8 versus 1.9 expected, prior 1.8. Trim 3.3 versus 3.4 prior. Median 2.9 versus 2.8 prior, all year on year.
Oh, you know what? I'm sorry. I was looking at some different. Yeah. Okay. Yeah. So all the numbers I did get was correct. I was like, yeah, I was looking at that, but I didn't look at the headline CPI number. So what do you make of that? I mean, when you're talking about trimmed and common CPI, it looks a little bit weaker. So the dollar Canadian spiked up, but I don't know. I don't know if I'd play into that right now. Not with the dollar the way it looks.
Stick with the common and the BOC core, because it's all just a hodgepodge of how many times can we try and guess inflation. My reading, CPI is up. Is up from 4.4% to 4.7%. That's the main thing. It's well above the target. The core's up, and the common is unchanged on last month, and that's it. But inflation is still there, like it is everywhere else.
Yeah. Well, if you guys, first of all, you guys know that for those of you that are Forex Analytics subscribers, I picked up the dollar Canadian down here at 124.30. I sold it last week when it spiked up to the 50% retracement at 126. So I'm out, and I'm not. If we dip back down to the 200-day moving average, I'm interested. Right now, I'm not doing anything, and I'd sell it up here at the 6182. So anywhere down here, I'd be long again, down there. And if you're up here, and if you guys want to see all those trades, just go over here to the trades room, and the trades room, you can go cycle through and go see where, myself and other people in the community, not just, those of us that are on the webinar right now, but other traders in the community can post in that chat room and do all the time. So let's talk a little bit about the chat rooms. Matter of fact, let me mention this because I want to make sure I mention this. We mention it to our community in our private webinars, but I haven't mentioned it here on the public webinar, I don't think. We're going through an upgrade process with our chat room. So here, let me go into the chat room. You guys are on Jumbotron if you guys want to say hello. For those traders in the chat room, you can see in our general chat right now, we've got 80 people in there. Then you go over to the Forex Flow room. There's another 34 in there. And in the trades room, you see there's about 60 people in there. So you can see we have a very active, probably one of the most active trading communities around. And one of the things I want to mention is what you see here in the chat rooms, it's all going to disappear this weekend. All the data is going. We have to update all of the back end software that we haven't done in a few years. So we're doing that for a reason. Steve's not here to talk about it, but I'll basically discuss what it is. All this information, you can go back and search for years. You can go back and search, go back years and, search what, somebody has said, but all that's got to go away this weekend, all that data, because we are upgrading all the back end, because what you're going to be able to see in the next few weeks is you're going to be able to combine all of these different chat rooms. You can, put up the Spanish chat room, the general chat room, the trades room, and you're going to all be able to view it on one page. So we are doing those upgrades, but by doing those upgrades, we actually have to upgrade the entire back end, which our developers have been working on for the last couple months. So, I just want to make mention of that because, if they're like, there's some news research pieces that you're like, oh, there's that Goldman piece that I wanted to pick up that, so-and-so dropped into the news and research tab. Well, go grab it, because if you try to grab it as of next week on Monday, it's going to be gone. So just want to let everybody know and give you some heads up. You got all week to grab that stuff. So, but that's pretty much it. I'm done.
Hey, buddy. Thank you, team.
Anybody else want to say anything?
Merry Christmas. I don't know.
You know what? Speaking of Christmas, I'm going to put up my Christmas lights this week because I really, really failed at Halloween decorations this year. So Christmas has got to get done this weekend, no matter what. Period.
It's gonna be a blue, blue, blue Christmas without you. I'll be so blue just thinking about you. Name that tune.
Elvis.
Yeah.
Blue Christmas.
Yeah. Congratulations, Blake Morrow. One name that tune.
You do a good. You do.
I do.
You really do a good Elvis impersonation, Dale. I like that.
Dale, before you go, can you have a look at silver for Jess, please? Because he's been wanting to look at silver since.
How about I'll pull up silver
before you started the webinar.
But by the way,
potential failing rally.
At the 200-day moving average. But let's talk about this really quick, Dale, since this is the inverted head and shoulder pattern. Some people looking at, I
Yeah.
referenced this as an inverted head and shoulder pattern because so many people do, but that move there was an Asian move. You know, you could say it's real.
Yeah,
or
that
not
was a
real.
flash crash.
It was like, it was one of those like Asia tripping everybody stops type of move. But the fact of the matter is that, you know, we are testing the 2480, which is a big breakout point for a lot of people. And we held it last night.
Yeah.
But then again, we're also, you know, capped by the 200-day moving average. So
it's got to hold that area on a close.
Yeah. Right. I was going to say, Dale, that we've really got to get out of that little range, right? What do you think?
Yes, I agree.
Okay. All right. So
I agree with most of what you talk about.
All right, cool. Well, everybody,
I just copy you.
Look,
like
I agree.
10,000
I
other
agree.
traders.
All right. Well, anyway. I'm just sitting here looking at it like I don't know what I'd want to do with silver. I mean, you if you get to 2480, you buy it.
Yeah.
You know, with stops below like 2450. And if you're a bear and you're like silver ain't going anywhere because Stelios owns it, so it's never going to go up again. So you know, if that's your point of view, just kidding. Still, you shorted at the 200-day moving average and put your stops above the highs. I mean, whatever however you have an opinion on
gold
how
silver
you feel
ratio
about
favors
silver.
long silver against gold.
Gold silver ratio is going below 40 again. Mark my words.
Okay, there you go. There's
but if the silver ratio goes below 40, that's usually not good for precious metals.
No, it is very good. Silver always outperforms on a rally. So it's as when the ratio goes down, it means that we're going up.
Yeah.
Okay. I was thinking opposite of that.
No worries.
Maybe it's I have to see it to have more of an opinion. But
don't worry.
Anyway, you okay now, Jay? All right,
guys.
Yep.
All
Thanks,
right. Well,
everybody.
don't just count your currencies still. Now that you're the biggest dollar bear in Europe, especially in Greece, and don't just count your coins. If you're a gold bull, Steve and K-Man, count your blessings and being part of a great team and being able to interact and bat around the markets every day, I count as a blessing. And if you guys are being helped and we're adding value to what you're doing here for free in face, then sow a good seed and become a subscriber so that it's a two-way relationship. And that's a wrap, and we'll see everyone tomorrow. I have Bruce Fraser tomorrow from RD Wyckoff. So have a great day trading, and you could join now and be there for the morning edge in 30 minutes.
Thanks, Dale.
Adios.
Thanks, everybody.
Cheers, guys.
See you guys.